Welcome back to the program. Now, if you take a quick look at where we are now with the world of oil, it's a very sticky world as always. Price, volume, inventories, production, output, very sticky sometimes trying to make sense of it all the time. Okay, so overnight, this is where we finish off. The Brent crude, for which the Nigeria's crudes benchmark about 0.5% in the red. Year to date, the Brent has lost about 2.52%. The price around 55.72 per barrel. The West Texas Intermediate, that's the U.S. Crude, 0.79%, about a 0.75% in the red, down also in the year, 2.10%, $52.59 per barrel. Natural gas, well, that's if you're trading this globally, you understand this, about 1% higher, 15% down south in the year, and you can see the current price, $3.16 per metric. What is all those MMBT? You sometimes get really confusing there, isn't it? Yeah. So Amaka Ajebu is the one who is going to shed some light on those things for us this morning. Good morning, it's good to see you again. Yes. On Thursday, on Tuesday, beg your pardon, we spent so much time talking about the domestic prices and food and agriculture products and what's going to happen to pastries and bread, remember? Breakfast, dinner, lunch and dinner, you remember? Yeah. Today, we're going to look at oil that powered those things. We're going to leave the rest of that conversation for later today. Okay, so where are we as far as the global picture is concerned when it comes to, well, I've just talked about the price, where we are at the moment.
Yes. Okay, so the Energy Institute Administration just released their information about stock builds in the U.S., and they show that stock build in the U.S. actually increased by 13.8 million barrels. So this is 2.6% lower than the preliminary reports by the API. So the markets, of course, this stock build of 13.8 million barrels is very large, but the markets are reacting in a very irrational way in that prices as at this morning have actually started to improve. So the investors are happy to say this, that the stock build is not as much as anticipated, but 13.8 million barrels is a huge number. Exactly.
And perhaps the market start moving on again. I caught a bit of that news overnight, and early today, about 20 million barrels is what the U.S. is pushing out. Again, because there is more inflows from the shale gas, from shale production. Again, because money is flowing. That market seems to be making a lot of money. Early today, I saw about $6.6 billion was what the U.S. oil investment market in January equity offerings alone has netted. In 13 offerings, $6.6 billion. That's a whole lot of money. But again, as prices start moving up, it's not a bad way so far in 2017, isn't it? Yes. 2.52% in January. Well, step into February. Not really so bad, isn't it?
No, it's not bad, but for this week we have to be careful, because although the markets are reacting positively this morning, a stock build of 13.8 million barrels is still a lot, so we should expect a bearish trend for the rest of this week. But in the longer term, everyone is still focusing on the OPEC and non-OPEC members and their production cut targets. And as of today, as of today, they have met 60% of their targets. So it's looking good in that regards, but
60%.
Then, yes, and in that regards, but then Trump and the risks attached to his policies, most of these investors have not been able to hedge against this risk, and then the uncertainty that comes with his policies. So you still have to be wary about the movement of prices in the
movement of prices, because again, if you look at the Iran sanctions and a bit of face-off, where not really, perhaps not being uncomfortable with each other. Donald Trump goes to NATO in the next couple of days to have a meeting, even though he says he doesn't believe in NATO. He should be disbanded. Now he's going heading there. And NATO would need crude oil and what have you. The bad guys, the world is still full of bad guys anyway. And so they'll still need to fight more wars, as it were, or keep the bad guys out so that the rest of us can sleep well at night. So, let's talk about the Chinese. Let's move a little bit to the east, where the Chinese is still a very major
importer
Yes,
of,
in this conversation.
Yes, yes. But then they are also channeling their policies towards self-sufficiency. So they are now patronizing their own local oil producers and trying to, you know, break away slightly from global oil prices and global oil. But as I said, China is like the largest has the largest demand for oil imports. So that kind of switch in trajectory is not going to be good for the oil markets.
For prices, isn't it?
Yeah.
Well, as far as Nigeria is concerned, any idea where we are at the moment? We're enjoying the price rally anyway.
Yes, we are.
So we're taking that in our pockets.
But our revenues...
I can see our capital reserves, our FX reserves are moving very well, nicely, heading towards 30 billion.
Yes, but are we feeling it, you know, in the economy as a whole? We need
well,
to...
that's a question the NLC folks are on the street this
trying
morning.
to, yes, exactly.
Maybe when you're driving back, you need to find out where they are, because they're already on the streets of Lagos saying the state of the economy and what have you.
Yes.
But for an economy like Nigeria, $28 billion is still a drop in the ocean.
Yes, it is.
If you look at what we should have in our reserve, we should be talking about 200 billion.
Reserve to population number is very, very
relative
little.
to the GDP itself, it's really low. So you think we're still doing about 1.6 million barrels?
Yeah, as at the most recent OPEC monthly report, yes. But like I said, our production is still stalled. So, and our revenue is actually production sensitive rather than price sensitive. So we really need to amp up the game when it comes to our production levels.
But you see, it's a very catchful for numbers,
Yes.
because once we get production to a certain level, then we'll get OPEC asking us to go under the knife.
Yes.
You know, we escaped that last September
because of the militant
activities. If we ramp up production,
to a certain
then
point,
OPEC is going to say, hey, folks,
you have
get
to
down here. You need a haircut.
Yeah.
You gotta get a haircut. So it's a little bit of maybe we should just keep it very nice where we are. Hope prices move to 60. Then
hope prices move to 60
and find a way to reduce our cost, maybe, isn't it?
Yes.
Because it looks like cost of producing a barrel of oil looks like one of the most expensive in the world in Nigeria. Some folks say it's as high as $20 a barrel.
Yeah, and also shale production costs are actually reducing.
Yes.
Yeah, so they're at about $40 to a barrel right now, from highs of $90 like cost per barrel. So yes, so I don't know, we have to really, you know, target policies to finding out what is the most cost-efficient way of producing
a barrel of oil. Because if we're doing less than 20, say around $4, $5, $10 a barrel,
then we have enough margin.
$55 a barrel, we'll just be home and having a nice time.
Yes, but then that will prevent some necessary policies from moving on, because
listen, sometimes economics and markets makes me sick. On one hand, it's like this, and the other hand, it's like that.
Yes.
Thank you.
No problem.
Thanks for coming. We appreciate that.